Okay, so this is our 5th visit to Soweto. And throughout our engagements with the Monetary Policy Committee, we have decided to incorporate some of your comments and suggestions. And we realize that you not only want to talk to us about monetary policy, but you have other issues that you'd like to engage us on. And therefore, we have termed tonight's engagement Talk to the SARB. So we are here tonight to talk to you all. Welcome. So before we continue, I would like to take you through some brief evacuation procedures in the unlikely event that we do have to evacuate the building. Kindly move to the sides, the exits on the sides that are clearly marked, and follow the instructions of the ushers that will be here to assist you. So remain calm and move to the sides. The exits are clearly marked. So the ladies and gents facilities are just outside the auditorium on my left, your right. As you walk out, you will see them clearly marked. And I just wanted to also mention that we have a very good attendance here tonight. And we'd really like to thank you all for taking your time on a weekday to come and join us here tonight. So I think you all deserve a round of applause. All right, so be sure that do remember that we are streaming live on YouTube, so you can check that channel out. Also, remember to hashtag SARB Talk. So we do have quite a few students joining us here tonight, if I'm not mistaken. So I know that this is in the frontier of all the young people. So as you have time, kindly hashtag SARB Talk. And while you're on your cell phones, please do switch to silent, just so that we don't disturb the proceedings here tonight. And if you don't know how to switch it on to silent, just take out the battery. All right, so these engagements couple the release of the October Monetary Policy Review, which is this hard copy right here. It's the MPR. So before you leave, please be sure to collect one of these booklets from the registration desk. What we also request that you do is that we've provided you with a small booklet. I hope you all have it. On page 29 of this booklet, we have a short feedback form. We really appreciate your feedback and comments. Please fill this in and hand it in at the registration desk before you leave tonight. All right, so before I hand over to the governor, I would like to welcome a few people. So please bear with me. We have here tonight the chair of SCOPA, Mr. Hlengwa, and we also have Joe Mbise, who is the chair of the Finance Portfolio Committee. We have the Dean of the Anglican Church, Reverend Tlwati. We also have the chairperson of NASASA, Mr. Andrew Lukele, and we also have the president of the United Funeral Directors Association, John Storum. So thank you so much for joining us here tonight, and I would like to hand over to our esteemed governor, who will start the proceedings for tonight. Thank you.
Thank you very much, Koki, and good afternoon, Dumelang and Bonani. Good to be back in Soweto. The forum in Soweto is always different from the other forums that we do. It is the most interactive of our forums. So we like spending more time hearing you than us telling you things. But I hear that there are students here, and they are on a longer life learning journey than us, the older folks. Just to state that the South African Reserve Bank is a creature of the Constitution, and it has been tasked in terms of the Constitution to protect the value of the currency in the interest of balanced and sustainable growth. So our main task is to protect the rands and cents in your pocket, so that the value is not eroded, that roughly the money in your pocket should be able to buy tomorrow roughly the same basket of goods and services that you are buying today. That's primarily what we do as the South African Reserve Bank. But what many people know the most is, of course, that there is the banknotes that are in your wallets, in your purses, in your pockets. But there are things that we take for granted. That when you go to an ATM and you withdraw cash, or when you go onto your banking app on your phone and you transact, or you go on the internet and you transact, when the money eventually reaches the beneficiary, at the back of all of those things, your bank transferring money to the bank of somebody else, at the back of that is what we call the national payment system. That national payment system is run by the South African Reserve Bank, and we always make sure that it is up and running. We run it on 2 different sites, so if one can go down, the other one will continue working seamlessly. And most of the things, by the way, you will never appreciate until you do not have them. So you've not had a situation where we said the national payment system has collapsed and banks can't transact with each other. But it is a very important function of the South African Reserve Bank. The third is that we protect the interests of users of the financial products, predominantly in the following important areas. The first ones being that you deposit money with a bank, or you open a bank account, and we regulate the bank for safety and soundness. And one of our main responsibilities is to ensure that when you are looking to get your money, that the bank is able to meet the obligations and able to give you the money. So we license the banks. We also do license insurance. People buy life policies and the lot, and that most of the life policies people take when they are young, and you hope that by the time you are 75 or age, that the insurer will be able to meet your obligation. And we have got a responsibility to make sure that the insurer will be there in the future to meet those obligations. Of course, we put these things by saying that we promote the resilience of the South African financial system through making sure that the institutions that we regulate are actually safe and sound. Well, many South Africans, if I was also ask how many of you owe somebody money, I am sure that the bulk of the room here will raise their hands. So every 2 months, we have got to assess the state of the South African economy. And with me here on the panel are the people responsible for making the final decision: Deputy Governor Kuben Naidu, Deputy Governor Fundi Chasivana, Deputy Governor Rashad Kasim, and Chris Lovald, who is the head of the research department in the Reserve Bank. In the end, the decision has to be made by this panel, but behind us are some 2,000 employees of the SARB, lots of them very clever, who produce incredible amounts of material to make sure that the decisions that we make as the monetary policy are informed decisions. So with those few introductory remarks, back to you, Koki.
Thank you so much, Governor. Okay, so I was actually going to ask you what you think, or how you could explain the role of the South African Reserve Bank on and how it affects the activities of everyday South African lives. But I think you've covered that quite briefly. So instead, I'm going to ask you just to explain to people here tonight how the process of making a monetary policy decision comes about. Can you take us through the meetings that you have and how you come about to making the interest rate decision?
Well, the preparations for the next meeting start as soon as the meeting ends. Because at the time that the meeting ends, we would have identified things we know and things we do not know. And many of the things we do not know, we do what all good economists do. We make some assumptions. We say, we think that this one will come out this way, and we think this one will come out this way. There are others that we try to predict or forecast what would happen sometime in the future. But even when we forecast that, there are unknowns. So we will then identify what the risks are to what we think is going to happen in the future. And the staff of the Reserve Bank, once we have sorted out what we think we know and what we think we do not know, put together an approximation of a future reality. That approximation of a future reality is presented in a macroeconomic forecast. So the staff will run these calculations where they would tell us that we think economic growth is going to be 0.6 this year. And we think this is what is going to happen in this quarter or in that quarter. They will then also say to us, we think that the inflation rate is going to be closer to 4.5% during the course of this year, and we think it will be rising to this level next year, rising to or coming down to this level in the other year, and then they go through a rigorous process, because then they will have got to ask themselves, what are the things that will influence growth going forward? And again, there will be things we know, will be things we do not know. And the ones we do not know, we will have to make guesstimates, and we would have to make assumptions about what is going to happen in the future. The same with the inflation, and the two key drivers of inflation being the oil price and the exchange rate. And those two, we do not know for sure what they are going to mean. We would have to end up having to guess what they are. But there are other factors that drive inflation which we are able to estimate, like we know people get these kinds of salary increases, and we know you will get a salary increase only once a year, and so we would be having a good indication of what is going to happen in the future. Of course, the other is the issue of food prices, which are also difficult to forecast, because the other thing is that with the food prices, you almost have to know what's going to happen to the weather. And we are not weather forecasters, so we have got to rely on what the South African Weather Services has to say. And I'm sure if just driving here and listening to the news bulletin, the weather forecast changed at every news bulletin. But we must make decision for the next 12 to 18 months. And that becomes a tricky situation. And so you will find then that there are robust debates within the staff of the bank in preparation to the monetary policy committee. We meet on over a 3-day period. On the first day, we get a lot of the staff into the meeting. They give us the state of the global economy, what they think the domestic economy is going to look like, what is happening in financial markets, and all of that. And we have to absorb all of this, because in the end, we must make a decision about this. We then proceed, and we have a big debate of what we think is going to happen in the future until we have an agreement on certain things of what is going to happen in the future. And then we retreat, and each individual has to reflect and come back and convince all of us about what they think about the economy and what they think we must do with interest rates. And you could imagine I end up having to chair this thing. After listening to the staff, and the staff that do their presentations are about anything between 20 and 25. They share these presentations. So, and you know how economists talk. Say, on the one hand this, on the other hand this. So if there were 25 people doing presentations and each of them saying on the one hand this, on the other hand this, there are already 50 views, okay? And then I must meet these ones in a committee, and each one of them have to go and process those things as if it is not enough. Each one of them is going to say, on the one hand this, and on the other hand this. And I have to say, do you know what? I know it's on the one hand this, on the other hand this. At 2 o'clock, at 3 o'clock, South Africans want to know what we have decided. So stop telling me on the one hand this, on the other hand this. Tell me what you think we must do. And eventually we would reach an agreement that says, okay, this is what we must do. And even after we have decided that this is what we must do, they say, this is what we must do, but there are risks on the horizon. There's a likelihood that this might happen and this might not happen. And so I have the unfortunate job then of having to stand up there and distill all those hands and say, this is what is happening with interest rates. That's how the process works.
Okay.
So can I add one or two small things?
Yes.
The first is the Reserve Bank has what's called an inflation target, right? It's agreed with government, and our inflation target is 3 to 6%. So we try to keep inflation as close to the middle of that range as possible, 3 to 6%. The second point to make is that interest rates are an instrument, and they impact the economy in about 12 to 24 months ahead. So if the inflation rate today is 4%, we have to attempt to see what's the inflation rate going to be 12 to 24 months ahead. And if we move interest rates today, it has no impact tomorrow. Right? It only has an impact on inflation in 12 to 24 months ahead. The last point is that we also have to take into account economic growth. How's the economy doing? Is the economy doing very well, poorly? And that has to factor into our interest rate decisions. In general, if inflation is well behaved and growth is low, you're going to get lower interest rates. But similarly, if inflation is high, you'll have higher interest rates. Right? So just to add to that.
Thank you so much. Thank you. So I think I'm going to jump onto what Deputy Governor Naidoo has just mentioned about where inflation is and where it's going. And I'd like to ask Dr. Chris Louweveld, we have seen inflation firmly moderating towards the midpoint, what we call 4.5%, which is the middle of the 3 to 6% band. And can you take us through what's driving these recent developments, and what's the SARB's view of where inflation is going in the near term?
Sure. Inflation was about 6% between the period from 2015 through to 2017. And since then, it's come down to about 4.5%. And it's stayed at that level, roughly speaking, for the last last 2 years. Our forecast has it picking up a little bit early next year as a result primarily of petrol. But a lot of the other factors that have driven inflation and kept it quite high previously have fallen away. And so what we've seen is kind of a series of positive outcomes that have pulled down that inflation rate quite persistently. It started with oil prices a couple of years ago, 2016 into 2017. Then it changed into food prices. So after the drought that we had, we saw food prices come down very, very fast. And that was driven by our own agricultural market, but also US dollar prices for food were coming down. So the cost of imported food came down. And that has been a really big driver of pulling down that headline inflation rate for a sustained period of time. The rand has been more stable on average, so there's quite a lot of volatility in it in the short term, but if you look at it over a long period of time, it's been fairly stable. And that's also kept imported goods prices much more stable than they used to be. The other factor, of course, is demand. Investment demand has been weak. The housing market, as you all know, has been quite weak. A key measure of prices is rental prices, and those have stayed low for about 6 to 8 months now, and we expect them to stay low for some time in the future, in part because there's been a big expansion in the housing market in recent years. So despite that petrol price-driven increase in the inflation forecast into next year, after that we see inflation coming back down to about 4.5% through the forecast, so over the forecast period. And we don't see at this stage any additional major shocks to that. I mean, there are always risks to that forecast, of course, but at this stage it's pretty benign.
All right, thank you so much. And I just also wanted to jump onto Deputy Governor Naidu mentioned that another important indicator to consider is economic growth. I just wanted to ask you, Deputy Governor Kasim, we know that the growth problem in South Africa is quite structural. And I think even documents such as the NDP, the National Development Plan, has mentioned some of the strides that we need to make to overcome some of these issues, such as growth between 6% and 8% just to get unemployment down. Where are we in this? Where do we stand currently with some of this progress that needs to be made?
Thank you very much. Well, as you know, currently we're not at a great space. We have growth under 1%, and we have unemployment at 29%. And that unemployment actually excludes a strata of workers who are searching for jobs. If you look at that, we are kind of 30, 31%. We're going even further up. So it's obviously not a sustainable situation. This country deserves higher growth rates. The people, in order to bring unemployment down, people's incomes to grow, particularly the poor. And this is where often we're in a very difficult situation, because we come to meetings, and we've engaged with people here before, is that we're a small player in the growth problem. We can play a really important role in trying to keep growth going when we have a recession, and you know, we've done that. We've brought the interest rate down several hundred basis points over the last couple of years. But by and large, we haven't really solved the growth problem. And this takes so many different facets of the country to really get growth moving. The one most important factor to get growth moving, obviously, is investment. And we all ask the question, why are people not investing in this country? Why is investment negative? And there are a whole variety of things, but I'll leave it here, and I'm sure there'll be questions, and we can get into more detail if there's interest in that.
All right.
Yeah.
Thank you so much, Deputy Governor. I also wanted to talk to what is the SARB doing, because there's clearly a desperation to have some input on what the SARB is doing, but maybe there's a misconception with regards to what the SARB should do when it comes to economic growth and playing a role in the state of the economy. So, Deputy Governor Chadzibana, do you want to take us through the facts of what the SARB is able to do and what the SARB is doing currently to try and solve the problems or try to contribute to the problems of the economy?
Thank you, Koketo. So, the SARB has got a set of instruments that we can use. So we normally talk about tools, and most of the time you would wonder, what do they mean that they have limited tools that they can use? So when institutions are set up, they generally are set up with a mandate, with an idea behind what they're supposed to achieve. So a central bank generally has an influence in what happens in financial markets, how money is intermediated between lenders and borrowers, and a central bank also has got an influence on how money flows through the economy. So when one thinks about the different things that the central bank can do, we must also refer back to the mandate. So when we often make a reference to what is the mandate of the Reserve Bank, this is the lens through which we can influence growth, we can influence broader developments in the economy. So the one mandate, the primary mandate of the Reserve Bank, of course, is price stability. And the reason why I think it is often said that central banks should focus on price stability, the governor has focused on. And the primary instrument that we use in this regard is interest rates. So it is through the pricing of money in the economy that we have an influence, but that normally will influence short-term decisions. So you must think of yourself now as a household. So when interest rates change, what do you do? As a household, it would affect the decisions that you make to buy or not to buy certain services, or to make investments or not to make certain investments. It also works in the same way for businesses. And so this is the main lens through which the SARB has a broad influence on economic growth. But that affects decisions in the short term. So if you were already thinking about buying a car, if the circumstances around you were going to allow you to do that, our decisions then would influence what type of car you buy or how much you end up paying to service that vehicle. So indirectly, that has got an impact on economic growth, because we would influence the level of consumption in the economy, so how much a household spending in the economy, how much investment is happening in the economy. But the cost of funding is not only, of course, influenced by what the SARB does. What we do influences short-term decisions, as I've mentioned, but there are other players that would influence sort of the long-term cost of borrowing. And so through monetary policy, we influence growth indirectly. The governor also mentioned an important function that we have as the SARB in terms of the regulation of the financial sector, ensuring that intermediation happens. So this is one of the primary roles that we have, to make sure that there is a financial sector that is functioning. So this is the part of the bank that is invisible most of the time. The backbone of the national payment system, making sure that payments can happen. It's a very important function, but when you look at the broader growth aggregates and you look at GDP growth of less than 1%, it seems like this central bank is not doing anything to contribute to growth, but it's a very important function that the central bank must keep doing so that the economy continues to function. There is, of course, the provision of the notes and coins, which we do. And the other part of our work relates, of course, to just the broader licensing of financial institutions and ensuring that the cost of transacting in the economy is much lower. So these are ways through which we promote and we support economic growth as a central bank. Not as direct as government spending more money. That's not something that we can do as a central bank. We also cannot influence directly whether people get employed or not, if, for example, that is affected by confidence or businesses deciding not to invest.
Okay, thank you so much. And lastly, I want to bring it back to the township sector. And I wanted to ask Deputy Governor Naidu, are banks lending to the township economy? What's happening in the sector?
Kogetsa, that's a difficult question. Let me start with the positive news. Lending to township households, to township businesses, is a lot higher today than it was 5 or 10 years ago. So the picture is getting better, but it's nowhere near enough. Right? There's large numbers of households in townships and businesses in townships that cannot get access to credit. So the picture is nowhere near enough. There's sort of long-run problems that explain that and short-run problems that explain that. Let me try and give you an example. So there's a number of government programs that actually encourage banks to lend. So government has a small business development incentive that encourages banks to lend. There's partnerships between banks and the government that helps to lend into the township economy. It's doing better, but it's still too small to move the dial. Right? The second point is that the bank wants to make a return on its loan. So the bank gets its money to lend from three places. It gets its money from the owners, it gets its money from depositors like you, and it borrows money. The typical interest rate on a deposit is about 5 or 6%. The typical interest rate on the money it borrows is about 8 or 9%. So it wants to make a return. And of course, it has to make a return based on whether it thinks the number of people in a particular pool who will default is high or low. So typically, if you're borrowing for a house or a car because there's an asset that the banks in some ways can take back if you don't pay, the interest rate is lower. And part of the problem in South Africa is that when you lend to businesses, they don't have a significant asset to pledge to take loans, so the interest rate is very high. So people in the townships, businesses in townships typically borrow at 20-25% interest, which is extremely high. Right? It's hard to make a return on your investment if you're borrowing at those rates. And so the demand for borrowing is then lower. Right? So households say, well, or businesses say, well, I can't afford to service a loan at 25% interest, so I don't borrow. And it becomes a cycle. As I said, I think the picture is getting better. We do encourage, in some ways, put pressure on banks to diversify their lending towards townships, towards the township economy. But at the same time, we can't force the banks to lend. Because if we do try and force the banks to lend, if we say, if I go to Standard Bank and I say, Koketso is a small business person, can you lend to her? I'm the regulator, I'm telling you to lend to her. And if Koketso doesn't pay, they're going to come to me and they say, well, she hasn't paid, who's going to give us the money now? Right? So while we can put pressure and encourage, and in some ways, through government programs, even subsidize the lending to the townships, we can't direct the banks to do that.
Okay, all right. Thank you so much. I hope that this has stimulated some of your questions, which we will now take. So I'm going to open the floor up to questions. When you do provide us with your question, kindly tell us your name and also where you are from. Then provide your question. So I think we'll take 4 or 5 questions at a round. Then we will allow the panel to respond, then take further questions thereafter. Can we get the first few questions? Thank you.
Good evening. My name is Nomsa Mazwai. I'm from Soweto. So I'm going to pick up on exactly what Deputy Governor just spoke about. So now we have technology and access to information. And my example is we have clearscore.com where we can all see our credit scores. And before we didn't have that. We couldn't tell what our credit scores were. So when people would make high-level statements, such as banks are not lending to township people living in townships as individuals because there's this idea that people in Soweto have low credit scores or are bad payers. And that has been proven to be false. And we've seen there's been a lot of cases that have come out where it's been proven that the banks are racially profiling people before they give loans. So are there any plans for the bank, for the Reserve Bank, to take measures that will stop an illegal practice? Because banks not loaning money to black individuals. I'll give you an example. My credit score was 615, so that's a good credit score in Johannesburg. And when I moved into a flat here in Jablani, the landlord charged me 3 times the deposit because they said that they couldn't trust that I would pay the rent. the banks also give me a really hard time just because I've changed my address to Soweto. And that's something that's proven. So my suggestion would be, or what I've been thinking is that I think it would be important for the Reserve Bank to do research on the banks and to analyze who are they denying loans or who are they giving high interest rates on loans, because that's another thing I struggle with. I get extremely high interest rates. I don't think I'm paying anything less than 13.5 on anything. So we need to understand if the Reserve Bank has plans to do the research and then penalize banks, so charge them a different rate, a different repo rate, if they are showing that they are engaging in the illegal practice of racial profiling when they are giving out loans and when we are applying for rent. Thanks.
Can we get your name again, please?
Nomsa Mazwai.
Nomsa, thank you so much. All right. Can we get a second question right here in front? We have two questions here in front. The gentleman in front here. All right.
My name is Mosco Chikana. I come from Mamelodi Online. My question to the panel is that as the regulator of the banking system, with private banks as shareholders, are we convinced as South Africans that private banks have got the same interest to assist growth as the Reserve Bank, probably even if the mandate doesn't allow them to influence those banks to look positively into issues of growth? Or do we believe that there's some kind of reluctance from the bank side? Because my view is that if you look at what would make our economy grow is if the banks have an interest to ensure that they assist those that have got the potential to growth, which are the SMMEs, to access capital and ensure that all the issues that were raised before in terms of interest rates, risk profiling, are properly researched and understood so that they don't just take it at face value and ensure that those that should be accessing those resources are not able to. And there's not even information as to how best can we improve this situation. So I'm just asking if our private banks are sharing the same vision as government and the Reserve Bank to ensure that they assist and actively participate in ensuring there's growth, especially in townships. Thank you.
Thank you so much. Can you pass it on to the gentleman to your right? Thank you so much.
Should I have to stand?
All right. You're okay. You can just sit. It's fine.
A quick word here. My name is Dan Maharsha. And Soweto. I run a company called Modified Values, Property Valuation. And also then we are diversifying as developers. The question which I just want to raise here, I've been listening from the governor and his deputies. 0.6%. That tells us something. It's a problem in the country. The question which we need to ask ourselves, I normally ask myself, 25 years long journey review in our democracy. What the success story? Versus apartheid system. The apartheid system, the only problem, racial discrimination, or what you term separate development. But compare, I just want to get your opinion, the six of you. If the current regime, they cannot govern, why can't we revisit apartheid system and see whether are we not going to, everything's not going to change? Because people are poor. People are worse than, better than apartheid system. The leadership vacuum in the country, too much infighting. What should we do? The mandate, you've been to your election mission mandate from the obviously from the politicians. Are we having good caliber who are running this country in that parliament? Do we need freedom fighters to run this country? 5 years is enough to reward them. From there, you and I, we must get in there and change the whole thing. I need your comment. Thank you.
Thank you. All right, I think we'll take 2 last questions at the back. All right, we'll take that one, and I think there's one more on this side. We'll take that one in the next round, please. Thank you.
Good evening to the governor and your team. My name is Mishek Musia. I run a business called Planet Care Waste Management. I just want to follow up on a question asked by Nomsa at the back regarding, Kuben, you mentioned that you do somehow try and influence the banks to lend to small businesses. Is this enticement by yourselves verbal, or is it legislated? Thank you.
Thank you. Thank you, Mishak. Can we take the question at the back, and then we'll pause it there?
Evening, my name is Portia Ndlovwena. I'm from Soweto. I'd like to pose a question, obviously, to the panel. Question being, with the appreciation that the governor did track the global trends of decreasing interest rates, and in the previous MPC meeting, he did decrease, I think, by 50 basis points. But in looking at the tools that they can probably use, and I concurred with some of the market analysts that said there was room for further decrease. And I was hoping in the last review, you would have at least given at least 25 basis points more to make up for the previous sort of prudent step that you had taken, obviously taking into consideration the market and the stability in the country, understandably, with the juggling effect. So in coming to the point of the Reserve Bank mandate, is there not maybe a position that we could take to satisfy the question outside? Because I think the argument becomes more about the mandate, whereas the question should be, what can we possibly do, or the tools we can possibly use to propel the growth that we need in the economy, in the SMMEs, via the interest rates that you're charging, obviously, to the major banks, which pass it on to the lenders. Thank you.
Thank you, Portia. All right, I think we'll respond.
Naidu, would you start with the access to credit and the lending to the SMMEs?
Sure.
Yeah, and then Fundi, you will talk about this room for further accommodation and what other central banks are doing. I'm sure you will help. You will remind Portia that when we cut rates in July, we cut before the other central banks started cutting, by the way. And yeah, Kuben, you can start. Rashad, you and I will share another question.
Thanks. Ms. White, thanks for your question. I think you, in some ways, you hit the nail on the head, right? There is a genuine problem where people in townships can't get access to credit, or that credit is very expensive. There's no doubt about it, right? While the banks claim that they don't do racial profiling, I have seen evidence that they still exist in some cases. There was an article in a newspaper a few months ago about an insurance company. And there was a family in the northern suburbs of Johannesburg, a fairly wealthy family, a white family, that had adopted a black girl. And so they had 2 girls, roughly the same age, 19, 20. The black person got a higher insurance premium than the white person. Live in the same house, same mother, same father, same address. Right? So these things still exist. It is illegal, it is immoral, and it is unjust, and we must fight this. Right? Where we have knowledge of this and where we have evidence of this, we take an absolutely harsh line. Right? One of the things that South Africa has done in the last few years is to set up a dedicated market conduct regulator called the Financial Sector Conduct Authority. Right? In some ways, they were saying to the central bank, you know, sometimes you guys are too soft on these companies, you only worry about profitability and capital. Right? That's what politicians were saying. So they set up a separate market conduct regulator to penalize companies that do this kind of stuff, that do racial profiling, that do redlining. Our law does not allow it. It is illegal. Right? They can risk rate people, so there may be different risk rates for people. But if your risk rate is dependent on your race or your geographic location, it is illegal in South Africa. Right? We saw yesterday a big insurer, MMI, got a 100 million rand fine for market conduct issues. Slightly different, but market conduct issues. Right? The market conduct regulator is fairly new. They've only been operating for about 18 months. But I think this is a positive step for society to clamp down hard on financial institutions that do not treat their customers fairly, that do not implement the laws of the country. Right? Private banks want to grow too. Private banks want growth. They want to lend into an economy that is growing. Right? But at the same time, they've got to be able to manage their risk. In some ways, it's only partially true that the Reserve Bank sets the interest rate in the economy. So we set one interest rate. But we actually don't set the rate at which most people borrow at. Right? Forgive me for taking 3 or 4 minutes, but let me explain how the interest rate is set.
I'm sure Poshia would like that.
So let's assume that the 10 people or 15 people in the front row each save 100 rand. And let's assume there's 10 of them, and the savings pool in the country is 100 rand. And Koketso, Fundi, and Rashad go to the bank, and they each want to borrow 100 rand to buy a car. The bank says, I don't have enough savings, so I'm going to set the interest rate. And because there are 3 of you here, I am going to set the interest rate at 40%. So Rashad says, oh, that's a bit steep for me. I won't buy a car this year. I'll come back next year. So Koketso and Fundi said, no, we want to buy a car. But actually, we can't afford 40% interest rate. So we'll buy a slightly cheaper car. Koketso says 60 rand. Fundi says 40 rand. The interest rate balances the savings in the country from those who want to lend. Right? If there are more people who save money, then that pool is bigger, then the interest rate at which you lend is lower. You borrow is lower. Right? The SARB has very little influence over that. Right? South Africa is a low savings economy. Right? So you have a very weak savings pool, and you have more people who want to borrow from that pool. So the interest rate is going to be higher. Right? The savings investment imbalance, as they call it in economics, the difference between the 10 people who are saving here and the people at the back who want to borrow that money is the main driver of the rate of interest at which you borrow at. That is not going to change overnight. That's not going to change in the medium to long term unless you get more employment, higher earnings, and more savings. Right? So in that sense, everybody wants the banks to lend, and everybody wants the banks to lend at a lower rate. But those depositors who deposit also want a higher interest on their deposits. You can't have it both ways. If the bank is going to pay you 10% on your deposit, then they're going to have to charge higher on the interest. Right? So the bank in this equation may say, these 10 people are each saving 100 rand. I'm going to push up the deposit rate to 20% so that I can get the 10 people in the second row to save as well. They may say, oh, 20% is a good return, so I'm going to save 2. But then they have to lend at 20 plus their cost structure. Right? So It is, and if you take 2 steps back, the interest rate in South Africa has come down in the last 15 to 20 years. I know people under the age of 30 don't believe me, but I'm sure there are people here over the age of 40. Right? So I started working in 95. I bought my first car, and interest rates went up to 25%. And I ate baked beans and toast for a few months, many months. Interest rates in the mid-90s, late 80s, mid-90s were in the 20%. Interest rates, and I'm talking about the prime rate, in most of the 90s, early 2000s, the prime rate was between 10 and 14%. In fact, between 12 and 14%. The interest rate that we have today, at a repo rate of 6.5 and a prime of about 10, is amongst the lowest interest rates that we as a country have had for 40 years. So if it's too high, I fully agree with you. But if you don't take 2 steps back and understand the bigger picture of what drives this interest rate, then you're going to think I'm the victim here. Right? Partly because while this country has done many bad things, we've done many good things, and we've been able to bring down that interest rate. The repo rate today at 6.5 is lower than for 90% of the time in the last 40 years. It was slightly lower for a few years after the financial crisis, but if you take a 30 to 40-year view, we have amongst the lowest interest rates that we've had in 2 generations. So it's not low enough. We want to get it lower. But it would be intellectually dishonest if we don't recognize the progress that we did make in this regard, but we have to make more progress in this regard. I want to just make one point on Mr. Jake Marsha, I think.
Yes.
Marsha. I disagree with you, sir, with due respect, that apartheid was better. Right? Things are bad, but they have gotten better in the last 25 years. I'm not saying that things are good or they're good enough. I've been coming to Soweto ever since I was a boy. Right? The conditions in Soweto that people live under have improved in the last 20 years. I'm not saying it's good enough. But you can admit to both. Things have gotten better, but they're not good enough. That's not a contradiction. So I will agree with you when you say they're not good enough. But I cannot agree with you that life has not gotten better in the last 20 years for most people in Soweto.
Rashad, you're going to talk about the mandate and the tools for growth. Just to complete on what Deputy Governor Naidu was saying about the rates. You see, in the 80s, inflation was 18% and prime rate was 21%. Today, the prime rate is 10% because inflation is at 4.5%. If you want lower interest rates, you must have lower inflation. Higher inflation leads to higher interest rates because the savers will always want to be compensated for high inflation. Now, Mr. Mahasha, Mr. Mahasha, I just wanted to paint for you a picture. And in the 80s, this country experienced significant stagflation from around 1982-83. Inflation was high, and actually growth turned even negative in 1983, 84, 85. And actually, at the dawn of democracy, we had had the longest contractionary period that we had had in our history. And the economy only started to pick up post-apartheid as a result of changed confidence and all of that stuff. That's an economic answer for you. And I also want to say to you that in the period between 2004 and 2007, this economy was growing in excess of 4%. We knew there were things we did right. The question we need to be asking ourselves is, in the aftermath of the crisis, the South African economy actually bounced very fast. But at the moment, we are growing slower than the world economy, and we are growing slower than many other emerging markets and developing economies. What is it that we are not doing that the others are doing, is the question. And I'm sure that if you have watched what we have been saying, we have constantly been saying that there are certain structural changes that are supposed to take place in the South African economy to lift the economy. Fiddling with interest rates is not going to get the tourists to come to South Africa. To get the tourists to come to South Africa, you need to do something else to get the tourists to come to South Africa. Tourists do not visit a country because interest rates in that country are low or are high. Fiddling with interest rates is not going to solve the problem with education outcomes. The countries today that are growing and are growing fast are countries that understand that the wealth of a country is not the physical assets the country has or the mineral wealth the country has underneath the soil. It's countries that appreciate that the wealth of the nation is in the know-how of its citizens. And so if a country wants to sustain itself in the growth, we need to be improving education outcomes. For the way in which the world is going is that the world is embracing technology. And for a country to embrace technology, we need people with know-how. We must change the education. I can go on and count many of these things. If we do not sort out these things, we are not going to get growth going. Rashad.
Yeah, just to supplement what the governor was saying, I think there is one element that is really important, and once again, it's central bankers talking about issues that go beyond the central bank, and that is that, just the one example that the governor uses is that I have, engaging with lots of people, I have living proof of how some countries are able to attract so many more tourists who would have loved to come to this country, but there are a number of concerns about the ability to make it easy for tourists to come here, to have online platforms, to apply easily for visas, and so on. That's just one, concrete example. And there is some movement. The president announced important initiatives in that side. One of the ways, if you think about growth, how do you get growth going? How do you get growth to grow at 5-10%, as you see in countries like China and India? And there are two ways it happens. One is, let's say that your GDP this year is 100 Rand, and 5 new firms are born. And those 5 new firms create jobs, and they invest. So, those new firms, including the growth of existing firms, contribute to growth. Now, what has happened in this economy? That hasn't happened. There hasn't been the growth of new firms. And then we could ask ourselves the question, why hasn't there been the growth of new firms? And some of it may be access to finance. Some of it may be other issues, know-how, as the governor said, skills, technology, and so on. I actually mentioned this at the last meeting in Soweto. One of the most adverse factors on economic growth in this country, I'm convinced, is dysfunctional municipalities. And I think that's really a key thing. You see firms pulling out. I asked the firm, why are you pulling out of this town? I only mentioned the town. I said, well, my business went on fire. I couldn't count on the fire services to come and help me. It wasn't working. The moment that happens, it tells me I can't rely on the services of this municipality for me to run a normal business. So there's some, pretty serious areas there. And as the governor says, we can talk ad nauseum about what you can do to improve growth. Now, that leads me to an interesting debate we have about mandate. What happens is that, sometimes there's some things happen in the economy, and the economy takes a dive. But they may happen because of bad political decisions. And then when we don't cut interest rates, people say, you're insensitive. Growth has come down. Your mandate should be to take into consideration employment and poverty and so on. And one of the biggest battles we have is trying to explain that every time, growth is low because of political uncertainty, because of a number of concerns beyond our control, we can't take on that burden. So often people who attack us say that, look, the economy is at 0.6, you should be cutting interest rates at 200-300 basis points. And what we try to say to people, we will cut at 200-300 basis points if we realize that there's a cyclical downturn, and that cyclical downturn will bring inflation down, then there's scope to cut. But if we are not cutting, it means that we've run out of steam. There are other things that have brought growth down, and that our ability to bring growth up is very limited. So we've been having this debate with a number of people who say you should have employment in your monetary policy mandate. And we say that actually we have that. We use technical language for it. We call it output gap, but it's a very important consideration. Our interest rates is determined very much by where the state of the economy is, and that's how we operate. I'll leave it at that. Thank you.
Just to say, thanks, Rashad. I mean, you are clearly a very good teacher. Just to say that we need, I mean, as people talk of employment should be part of your mandate, I want to just to state the following. You can't beat an economy that is on its knees and growing at 0.6% and hope that it will create lots of jobs. Jobs are an outcome of growth. An economy that doesn't grow cannot produce jobs. That's one. Two, if you want jobs, and I people say the government is not creating jobs. No. If you want jobs, you must create businesses. It is because you have got businesses that businesses decide to employ people. So if you were to ask a bureaucrat in a department and says that it is for you to create jobs, they will think of drafting a memo that they create a certain number of jobs in their department. That does not add to economic activity. The jobs that are the jobs that are created because businesses are created and businesses are profitable. And if you create an environment for businesses to be created and to be profitable, profitable businesses pay taxes. And profitable businesses employ people. And employed people pay taxes. And employed people spend money. And that adds to economic activity. And I think that it is important to get that sequencing right to understand that jobs almost come at the end. It is because you have is growing. A growing economy creates jobs. A shrinking economy sheds jobs.
You forgot about Portia.
Portia?
I have not forgotten about Portia.
Yes,
Portia asked,
Portia,
why didn't you cut rates?
Portia is yours.
So Portia, before we talk about why we didn't cut interest rates, let's talk about why the other countries out there are cutting interest rates. So they're cutting interest rates because the economies are growing, employment is growing, but prices are very, very low for them. And their challenge is very different to us. So they're using monetary policy to stimulate or to create inflation in the economy, because there is a trade-off. We, as a country, have not arrived at that position yet, where we have deflation, where prices are declining. So where prices are declining, that has a cost for businesses as well. So I think that that's something that's quite important to think about. And the other reason, of course, that they are cutting interest rates is that inflation is not only low now, but the general expectations of the public and of market participants is that inflation will be even lower in those countries in the future. So when we talk about inflation expectations, that's what we're talking about. So that's what's happening in Japan, in the US, and in the EU. And they have very few structural factors that are preventing people from sort of making investments in the economy or spending money in the economy. So what is happening in South Africa? In South Africa, we still have inflation that is rising. It's not rising at the levels at which it has been in the past, but we still have inflation. So at the last reading, it was sitting at about 4.4%, but our inflation is still rising. So the most important issue that we think about as the MPC is, firstly, what is it that we're targeting? So we've set ourselves a target of inflation of around 4.5%. And actually, I should rephrase. We have a preference for inflation of 4.5% within our existing inflation target band. And the reason why we have this set for ourselves is when we compare South Africa to the other countries that we trade with, their inflation is much lower. So if our inflation is at around 4.5%, let's assume, and the countries that we trade with have inflation of around 2%, that means South African goods are more than goods in those countries. And also, it is bad for your pockets because it means every single year you're buying fewer and fewer goods for the same 10 Rand as the governor said at the end of the day. So we think it's quite important for us to start to frame inflation expectations around this 4.5%, that this is the number that we are planning around. At the moment, most of us in this country still expect inflation of around 5%. And if we all expect inflation of around 5%, we as households expect inflation of around 5%, the businesses expect inflation of around 5%. When they mark up their prices each and every year, that's likely the level of inflation that you are likely to have going forward. So at the moment when we had our last MPC meeting, our view was that there are still some risks in the horizon that could push inflation up. And we think that the current level of interest rates allow us then to contain inflation to some extent. So we don't think we are in a position, or we were not in the position when we last met, to bring down interest rate because of these risks in the horizon. But overall, we think we are very close to containing inflation on a sustainable basis within our targeted level of 4.5%, the midpoint of the inflation target. And we would like to see inflation expectations coming down so that we become a low-cost economy overall.
Thank you. So before we take our second round of questions, I'd like to remind you to please tweet SARB, #SARBTalk. So continue to tweet #SARBTalk while we are continuing with this engagement. So just also to remind you, when you're taking pictures, kindly switch off your flash. It is disturbing the lights here and the cameras in front. Okay, so can we take our second round of questions? Wow. Okay, can we go towards this side, towards the back, please? I think we had 2 burning questions from there, and then we'll come in front. All right.
Good evening to the Governor and the panel at large. I'm Katlego from UJ. I'd like to know that seeing that we're having an emergence of fintech in South Africa, what impact will it have towards our economy? And the second question is that seeing that we were going to have a bank strike, what contingency plan did you implement towards the NPS? Thank you.
Thank you, Katlego. Can we get a
What
sec?
was his first
Pardon?
question?
Your first question.
Fintech.
Fintech.
We are going to give those to Rashad. I think he has set an example. To accommodate as many people as possible, if we could keep questions brief like that, it will help.
Yeah, I agree.
Okay.
I agree.
Hi, I'm Begin Kosi. I'm an academic from Soweto. My question is related to the CX report, Advocate Mkwebane, which was dismissed by the Concord for overreaching, quote unquote. My question is, what, in your view, was she, in terms of the mandate of the Reserve Bank, do you think it should have been amended? I know, yeah.
Thank you, Bonginkosi. Did you guys get the question?
No.
All right. Bonginkosi, can you just summarize your question maybe in one line, just so that we know?
Okay. The mandate, I think it was, I think according to the Constitution, your mandate is for growth. And she was advocating that it must serve the people, etc. So what is your view concerning that?
Oh, I think you mean human development, ne?
Yes, yes.
Okay, thank you. Can we get the questions here in front, please? I promise we will come back to the back.
Good evening. My name is Hardy, and I'm so grateful to be here for this opportunity. As a radicalist in the fourth industrial revolution, I'd like to know how far is the South African Reserve Bank taking towards initiating a security token. We can all see the new wave of investments that are happening, and unfortunately, I've taken arms against the rand by building my own Bitcoin mining farm. It's hard for me to say such things, that I'll be hedging against my own currency, motherland currency, but it's currently something that I'm in the works of doing. So SARB, how far are we in terms of building our own security token? Because already we can see banks are already colluding against our own currency. And I don't know, I see a dire future for us South Africans if we don't take it upon ourselves to, invest in ourselves. Thank you.
Thank you, Hardy. All right, can you just get this question here in front, please?
Evening. Alfio Sealeta from Masakana Burial Society in Mamelodi. Governor, we have a challenge. The burial societies, how much do the banks do in terms of the banking from the burial societies? But they don't respect the burial societies. And most of the burial societies are tired of depositing, depositing and withdrawing. They also want to start their businesses, starting with cooperatives, but going to the bank. They all classify us as club accounts in order for them to see how much profit do they do. But as an individual society, when you go to the bank, they will never lend you money. We are affiliated to NASASA, National Stockfile Association of South Africa. They came with a solution, starting a cooperative bank. The request here is that how is Reserve Bank going to support NASASA with that cooperative bank? Because Governor, you said for growth, we need to create jobs. What NASASA is coming with is creation of jobs. They need support. They must not face what African banks have faced. So it's a request that Reserve Bank support NASASA with that cooperative bank, then we will withdraw as Stokvels from all those banks and go to that cooperative bank. Then it will be a solution. Thank you.
Thank you, Alpheus. Can you just get this brief question here?
Okay. Allow me to basically start by extending my fraternal hands, my hand of fraternal greetings to the House at large. My name is Paul Wamalema, a member of the provincial legislature in Gauteng. Governor, how I wish I could not speak in this session, because ours is to come and listen to the views of our people here. But I'm tempted to just pose one or two questions. The first one is on the development of township economy, as to what is your policy position insofar as that is concerned. That's the first one. The second one, do you have measures in place? Because I know for a fact that primarily your mandate is to protect the value of the currency and also to maintain the financial stability in the country. Do you, in relation to that, do you have measures in place to protect the value of the currency from being mischievously manipulated by the faceless external sinister forces or the faceless agents of the external sinister forces with ill intents to destabilize this country? I think it's very. I have noticed that you have foreign shareholders as part of your management, and if you are having those foreign shareholders, I would need to check as to when it comes to the control of the value of the currency between yourselves and the FDI or the foreign direct investors, who has the control of the value of the currency. The reason why I'm asking this question is that in some instances, you would see some individuals mischievously manipulating the currency to advance their political expediency. When they want to direct this country to a particular political direction, you would be told that the value of a rand has gone down because there was a reshuffling of ministers and so on. Thank you very much.
Thank you, Paul.
Thank you very much, Governor. My name is John Bisi. I'm the chairperson of the Portfolio Committee of Finance in the Gauteng Legislature. Actually, I did not want to speak myself as well, but I'm tempted to ask this question because I think it has an impact on our economy as well as in our currency. The issue of the China-USA trade war, what impact does it have to our own currency? Because that is one of the problems that we are currently facing as a country. The second one is it's a political one. I know it might be difficult for you to answer, but I think I must ask this question. There's been a discussion in the country. I think we are familiar with the debate that there are those that want to nationalize the Reserve Bank. What is your take as the governors of this bank, so that we at least clarify those of us who are not well schooled in that particular area? Thank you very much.
Thank you, Joe. One last question?
Yeah, sure. If we could, people can be brief so that we can fit in. I probably think it might be the right last.
Okay, just two last ones here in front, and then we'll come.
And two at the back.
Yeah, two in front and two at the back. Just brief, guys. Maybe just a sentence or two.
Hello.
I will come to the middle, I promise.
Dumelang. Kalibizo ke nna bolelang. Firstly, I'd like to say that you were saying that the success of a country is not based, the economic success of a country is not really based on what is beneath the ground. It is based on what the citizens are thinking. Yes, that is true, but it is false to say that the success of the economy is not based on what's within the ground of our country. I mean, South Africa, we produce like about 75% of the world's diamond, and we produce gold, like we're making babies, you know. We have resources. Because if that's true, then Muammar Gaddafi died for a lie. Because he said that, you know, because he came with the new thought that, okay, look, we have the resources in Africa. So therefore, that's galvanize and put our resources together so that we can grow our country and create a United States of Africa, so to say. So, but anyway, that is not my question. My question is... My question is, what are you doing to deal with the debt, IMF? Because what's happening on the international stage, no matter we always dance to the tune of what happens on the international stage. We have a huge debt with the IMF, even with the World Bank. What are we doing about that?
Thank you.
We didn't say your name.
Bolelang.
My name is Bolelang.
Bolelang.
Yes, it's almost Soweto.
Okay, Raleboch. Can we get the question in front? Thank you.
Good day, everyone. Panel, I have a challenge and a question. First, I would like to question you first about this. The small business in Soweto as a whole is experiencing a lot of turmoil when it comes to getting funding and employing the youth as well. I am a small business, and it's very hard to employ somebody when you don't make money. We do make some money, but that money is not even enough to share with anyone. Two, okay, let me just move away from that. My challenge to you is, we do have organizations here, youth organizations that will be willing to come to you, learn the basics of money, learn the basics of maths, and be able to go back to the schools in the townships and teach them about how money should be used and what the value of the rand truly is. Thanks.
Thank you. All right. At the back, please. Can we just go to the back and then I'll come back to the middle? But please keep it brief, guys. If you're not brief, I'm not going to come back to the back.
Yo, dumelang man. You know, I'm from Sharpeville, and I usually come to Soweto just to, you know, inspire myself because Soweto is a thriving township. You drive anywhere in Soweto, everywhere, no potholes, and business is happening at a small scale, at a, you know, big scale, and, you know, and then I go back to Sharpeville, right?
Abuti, please keep it brief.
Okay, cool.
Yes.
Okay, cool. 1 minute.
No, 30 seconds.
Okay, cool. I just want to say that this country has a human resources problem, and that, you know, people who lack skills are put in leadership positions. That's a number one problem, right? And number two is that solutions are not LSM based, which means that I could be inventing a light bulb, but I'm in Mkuku somewhere in KZN, and I won't be able to reach the Reserve Bank or ABSA or all of these banks based on I can't afford data, and I don't have, I can't speak English, and most of your campaigns that you do are online, you see? So how are we gonna solve that problem? Okay. You understand? So back to solutions are not LSM based, okay, right? Solutions are solutions. It doesn't matter where they come from, right? And then back to you have a human resources problem. You are putting people in leadership positions, and those people cannot do anything. And that's the problem that we have today.
Thank you. Thank you.
I've got the mic.
Okay. We're just taking one last question at the back, then we will
you.
Continue in the next round. Please, I will start with you.
Thank you. My name is Delisile from a cooperative financial institution. My question is, How and when can cooperative banks be allowed to access the national payment system, like some of the commercial banks? Thank you.
Thank you, Nelisiwe. Thank you. All right.
Okay, I think that we might end up having to continue this conversation outside. Naidu, I think there were questions with your names
Nothing
written on them. But Rashad, I want you to deal with the cryptos and the coin. And Chris, you must deal with the China-USA trade war. Yeah, if you could, and then the NPS, including access by the cooperative banks to the NPS.
I don't know if Naidu can
Naidu,
bail me out on that
Naidu can deal with that. Okay, Nkosi, the question about the CX report, that thing was ventilated in court and settled. It went to the highest court in the land, done. So let's not go there. The attempt to amend the mandate of the Reserve Bank through the back door was thrown out in court. The people of this country have entered into a covenant in the form of a constitution. The constitution spelled out the responsibilities of various institutions that are creatures of the constitution and tasked them with particular responsibilities. And you have got to deal with the banking stuff from Alfred. You had that.
Obvious.
Yes. And then you also have since you are our specialist on the township economy, and you'll also talk about the manipulation of the exchange rate, since you are so good at that. Fundi, I've got to give you something.
I relax. I will help others.
No. I'm giving you the IMF debt. They say that we owe the IMF a lot of money, and what are we going to do about that? That's an easy one for you. And teaching young people about money. You like that stuff, right? Naidu, would you start?
Sure. I guess I'll cluster two questions in one. We would like to encourage people to form cooperative banks. We've got 4 types of institutions in South Africa in terms of the law. A cooperative financial institution, which has got less than 2 million rand in deposits. A cooperative bank has more than 2 million rand of deposits. A mutual bank that has 10 million rand of deposits, and a commercial bank that has 250 million rand of capital. Right? Since the 1st of April 2018, we've taken over the supervision of cooperative financial institutions and cooperative banks. We're happy to say that we've got several new license applications for both cooperative financial institutions, that's under the 2 million rand line, and cooperative banks above the 2 million rand line. And we would welcome more applications. This from the Stokvel Association or the burial societies, if they think that they want to have a cooperative financial institution, so they're below 2 million, but they would like to grow into a cooperative bank, we would welcome that. The Treasury has an entity called the Cooperative Banks Development Agency, which is tasked with helping, supporting, hand-holding cooperative financial institutions to graduate into cooperative banks and cooperative banks to graduate into mutual banks. Right? At the moment, the law does not allow cooperative banks to get access to the payment system directly. They do have to go through commercial banks. However, mutual banks, which has a minimum deposit amount of 10 million rand, does have access to the payment system. 10 million, if I think about the pool of Stokvel savings in South Africa, is actually not that large. Right? There are many Stokvels in South Africa that have more than 10 million in deposits. You pool 2 or 3 of those, you could easily meet the requirements of a mutual bank. And a mutual bank can get full access to the national payment system, can do settlement and clearing on their own. So we will welcome that, and we will help and support the entities in that process. Chair, on the manipulation of the rand, there is presently a case that the Competition Commission is taking against certain commercial banks on alleged manipulation of the rand. We look forward to the outcome of that case. If any bank engages in conduct that is unethical or immoral or illegal, we will join the Competition Commission in throwing the book at them. We will not condone any such actions. I want to take a slight diversion on the SARB ownership, Chair, if you don't mind. The SARB does have private shareholders, but they are not private. The SARB is not privately owned. The shareholders have no influence on policy. They have no influence on the appointment of the governors or the MPC. They have no influence on the currency. The shareholders get 10 cents a year per share dividend, capped in law. It can't be changed. We have 2 million shareholders. So the total amount that the shareholders get is 200,000 rand. Last year, the SARB made 6 billion rand profit. Right? So I think the governor must correct me on my maths, but that is 0.00034% of the profit that goes to the shareholders. The rest goes to government, either directly or indirectly. Right? So while we have private shareholders, we are not owned by these private shareholders. If you're a foreigner and you own private shares, you can't even have voting rights in the AGM. You have no rights. The board of the SARB, which is a governance board, which also plays no role in policy, no role in the appointments of staff, is comprising of 15 people, of which government appoints 8, and the shareholders elect 7. But to be elected as a shareholder from the private shareholders, you have to pass a vetting committee, which includes a High Court judge and NEDLAC. Right? So a private shareholder can't even become a member of the board without passing those hurdles. Right? So there must not be this misconception that because the SARB has private shareholders, that they have any influence over policy or on the currency or on the manipulation of the currency. They have no means to do that through the SARB.
Well done. China.
China. Thanks. Let me start by saying that the China-US trade war is deeply worrying because it is a big shock to the global economy. And the way that operates is through export volumes, which have been declining quite precipitously. So economies that are particularly export dependent, like the German economy, has suffered a really sharp decline in its GDP, and lots of others have as well. The tariffs that have been applied by the US and the Chinese on each other primarily hit the manufacturing sector. And that is, of course, even more concerning because it's likely to feed through into investment. So, one of the big drivers of global growth and in any economy's growth is that investment growth rate. So if that investment growth rate comes down, you could see global GDP being weaker for quite a long time. So how does that trace through to the rand? As the global GDP gets negatively shocked, the markets perceive that there's a higher risk, and they shift money out of riskier investments. So they shift money out of equities of various kinds. They shift money out of emerging markets, which are seen to be riskier investments than advanced economies, and they put money into things like gold and bonds, particularly bonds issued by advanced economies, again, like Germany, the United States. And that risk, that rise in risk, feeds through to the rand because, of course, we run current account deficits. So we are seen to be on the riskier side of emerging markets. And so more rand assets will be sold, and the rand will move more than many other currencies. And if I had a graph, I could show you how the rand has moved over time relative to other currencies, and it's quite a lot. So that shift out of riskier assets is a sort of an attempt by investors to find a safe haven. and they pull money out of everything that they they think is risky. So it is obviously a very worrying thing. Can I just also talk about the human capital resources story just very briefly? I mean, I think, the point is, you made a really good point. South Africa is a diversified economy. Resources have played a very important role in the economy's development over many, many years. But those resources are finite. And the prices of those resources go up and down quite a lot. Gold happens to be high today because the world economy is riskier. But 6 months ago, the gold price was quite a lot lower. So the return to the South African economy from that gold price varies a lot. Take another resource that we pull out of the ground and export is platinum. Platinum prices have been very high. Then there was a scandal in Germany involving diesel emissions in the car industry, and suddenly the platinum price collapsed, and it still hasn't recovered. It's recovered a little bit. But the point is just that these are not things that, I think strongly growing economies can rely on over time. They are finite, they will run out, the price varies a lot. So most countries, when they want to diversify, they want to move away from resources. They want to build human capital in particular, because what we've seen over the last 20 or 30 years is that economies that have good levels of human capital and can build human capital quickly grow much, much faster than any other economies. So that's why the governor says, this is really what we ought to be thinking about, because over the very long term, it's a much safer bet for raising the standards of livings of all South Africans. Thanks.
Rashad?
Yeah. Thank you very much. Just to start off with saying that fintech, in some respects, shouldn't be seen any differently from other major technology leaps. When we introduced automated banking and so on, tellers and so on. So it is another technology leap, and it's a fast leap. So the bank has been quite involved in this in many respects. We're part of the Intergovernmental Working Group on Fintech. We have a fintech unit. We have an innovation hub. I think the key thing for us is, one must distinguish between, crypto assets, stable coins, on the one hand, and a central bank-issued digital currency on the other hand. Now, as far as crypto assets and stable coins are concerned, the bank is looking into it. It has a bunch of people who try to look at firms who are fintech units and whether regulation prevents them from growing. And I think that's one aspect. But from our point of view, at this stage, what's quite an important precondition is that money must be, a medium of exchange, a unit of account, and a store of value. And if we look at digital currency, it's really central bank-issued digital currency. And in fact, we are experimenting. And the main reason for this is twofold. The first is that, why do we want to do it? Sometimes, technology comes and you want to do it to improve efficiency. But there may be other social objectives. For example, one of the most important arguments about fintech is that it could, or less fintech, more digital currency, it could lead to financial inclusion. That you have people in rural areas that may have difficulty getting access to cash, but have mobile phones. So it's very much alive. There are very, very enthusiastic people in the bank who work on this. We're part of an international community that's looking into these issues. And we actually have an experience from the technology side of adopting distributed ledger technology in something called Project Coca. Go onto our website and you can learn more about it. Thank you.
Fundi?
Okay, so at the moment, government does not have an IMF loan or a World Bank loan. So only Eskom has got a loan facility with the World Bank, but it's a project-based loan facility. So the bulk of the over 2 trillion rand of debt that government holds is held by domestic pension funds. So if you contribute to a pension fund, that's most likely where they put your money. Banks, insurers. And about 37% then of government debt is held by non-residents. Those non-residents are still of a very similar composition to the domestic investors. So they are still global banks, global pension funds, and the like that hold South African government debt.
He wants to help you teach.
All right, and then in terms of teaching young people, certainly I think that's something that we can converse about. At the moment, the SARB has got the MPC Schools Challenge, and this is how we do outreach and we get to younger people. We have a broader cohort of our young economists at the bank. They go around the country. This year we had over almost 300 schools that we engaged with through the MPC Schools Challenge, but we certainly would welcome ongoing interaction and to hear your suggestions there.
And we're looking forward to a Soweto school win. So far, I'm not sure that our participation in Soweto, it has gone up, but we are looking forward to a school from Soweto winning. The other townships are running ahead and they are asking.
Just a tiny correction to Fundi, an important one. This month, government's debt went past 3 trillion.
3 trillion. I said over 2 trillion. Okay. So now that you're being this transparent, right? So on average, if you think about it, every day government goes and borrows over R1 billion. Every day, if you think about it on an aggregate basis, that's what is required to fund government.
Governor, the National Payment System and Cooperative Banks.
He dealt with it.
Oh, do you deal with it? Yeah.
Yes, he dealt with it. I think, Koki, I'm going to say that we must invite people so that we could go and talk about. There was the one question, I mean, Naidu had liked answering it, but he got carried away talking about the nationalization of the bank. It was about the township economy and what our policy position is. The policies that we follow are the policies of government. We are the responsibility with monetary policy, finance, and that. And we get worried, as Kuben was earlier on spelling out, about the behavior of the banks in the townships. And if we pick up behavior that is unbecoming, it has to be reported with the Financial Conduct Authority, and they are able to deal with that. But as we close, I want to pose this challenge, because we're talking of a township economy. And in a way, we're putting this thing like a lager. If you were to think of a township being a country, and a country being part of a global economic system, the country would understand that it has got certain competencies to produce certain things for itself. And it would also produce things that it wants to sell to other countries. For there isn't a country that will get rich by simply producing things that only itself needs, because you will not be able to produce everything you need. And that is why countries trade. Back to the township. If we think that our conceptualization of a township economy is that the money must just circulate in the township, and we do not connect the township with the rest of the economy, we are making a terrible mistake. The township must produce things that the rest of the economy also would like to consume. Just as the rest of the country or the rest or other townships might be producing things that they sell to the next township. And I think that in thinking about the township economy, we have got to understand that we have got to be connecting businesses in the townships with the rest of the economy, so that is how we would actually be growing the township economy, rather than of thinking that we would just want money to circulate in the township. And in the same way that there would be people who are working full-time in the township, and there are people who leave the township to go and work elsewhere. There surely would be people who are coming from elsewhere to come and work here because they have got something else to offer that that particular township might not be offering. So when we think of the township economy, let us connect that economy with the rest of the economy rather than trying to restrict it to itself. Ladies and gentlemen, I thank you very much for your very lively debate. Soweto never disappoints. The questions are as vibrant as we had seen. And very clearly when we come to Soweto, we end up having to think about so many other things. When we discuss with the other monetary policy forums, it's finance, it's the payments, it's that, and that. And when we have to come here, we have got to think about the burial society, the stokvel, and the cooperative banks, how they access all of these things. And it just enhances our interaction with society, one, and secondly, it enhances our own understanding of the challenges that businesses in the township also face. Thank you very much. Koki?
Thank you so much. Thank you all for attending. As I said, we have a very good attendance here today, and we really appreciate you taking your time to join us here tonight. So before we move over to the light dinner that is prepared for you, where you will also be able to converse further with our panelists here, we also want to remind you to please hand in your feedback forms on page 29 in your small booklet, and also remember to collect one of the hard copies of the MPR. If you are watching us live on YouTube and you know of you know that we are attending or presenting the MPR close to where you may stay in different regions around the country, please do join us and pose your questions to us in person. All right, so please join us for a light dinner that we have prepared, and afterwards, have a safe travel, and we hope to see you again next year. Thank you.